You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NiShacks.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how are you doing?
I'm doing great, thanks. Calling in from the Indian Ocean in the wonderful country of Mauritius today.
I had to look up how to pronounce that one, but it looks like a beautiful country off the coast of East Africa, east of Madagascar, right?
Yes, that is indeed correct. And if I'm not very much mistaken, there was a little bit of a boom here in terms of the Red Sea crisis, because when the ships were diverted around Africa, at least in the beginning part of the crisis, there was an uptick in ships that wanted to bunker here.
Okay, interesting. It's all connected, it seems. Well, I want to apologize to our listeners. Last week I said we'd be back on schedule this week, but I forgot that it was Labor Day, so we're filming today on Tuesday, September 2nd. But we are back in business, and we've got a lot to talk about. So Lars, maybe we kick off talking about rates. What is going on with Asia-Europe right now?
Asia-Europe is basically behaving the way you would expect Asia-Europe to behave. That means that your spot rates are continuing to slide, which fits well. This is the end of the peak season. So this is what you would always expect. So you're seeping a couple of $100 per week. It's likely going to continue to seep in the coming weeks ahead. That shouldn't send any alarm bells ringing. It really is par for the course this time of the year. What perhaps was slightly more surprising in terms of rates, if you look at the paid spot rates on the NiFi on the Pacific, they definitely continue to go down. That again is unsurprising. The main thing to actually note this week, if again this is the paid spot rates, not the quoted, but the paid spot rates. Usually, spot rates from China going into the U.S. West Coast is slightly lower than what you see from Southeast Asia and from Northeast Asia. This week, we're actually at a point where these three are more or less on par with each other. That does seem to indicate some weakness, not so much from China, but actually from Northeast Asia and Southeast Asia, since they don't have their usual premium. And again, this is what is actually being paid, so it's not what's being quoted out there. If we look at what is being quoted out there from the SCFI, we actually did this week see a slight increase. Slight in this context is about $300, 40-footer that the Pacific rates went up. Question is, why? Is this a harbinger of a last-minute surge in cargo? Remains to be seen. Keep in mind that for the last couple of months, the carriers have basically filed GRIs to the tune between $1,000 and $3,000 per FFE every fortnight. And so far, they have been fully and wholly unsuccessful in getting any of them. This time around, we saw them getting 300. We might see it increase a little bit more this week because technically speaking, we hadn't even reached the 1st of September with the implementation date. But I have a hard time seeing this is really going to lead anywhere. We are getting too late in the game compared to both the holiday season goods that needs to come on the shelves and also coming up against the Golden Week in China. So it seems that peak season on Pacific, barring any unforeseen circumstances, is approaching its end as well. This is our last hurrah before we then go into also a drop.
Also, quick question for you. In the post-COVID years, looking at like during the peak season for TPEB, is it pretty common to see GRIs between like $1,000, couple $1,000, like you were mentioning, we were seeing earlier this summer?
You can say these very, very high, let's call them ambitious targets being put out by the carriers. That's clearly something they have learned during COVID. Pre-COVID, prior to 2020, I don't think you would ever see a carrier file a GRI of $3,000. That would have been deemed completely out there. But as we've seen the last 5 years, pricing is not the way that pricing used to be. Carriers definitely learned if the market is there, rates can certainly increase faster and higher than we ever thought possible. But the market is the market. That only happens if there's a genuine space crunch. If that is not there, these increases basically just fall flat.
Yeah, and if there's other options with other carriers that have lower rates, then it's not going to stick and you're not going to see those prices accepted.
Exactly. It's always a matter of supply and demand. We actually saw that during this very, very brief spike late May or early June, where we could see the spike in quoted rates. But when we then looked at the cargo on the actual paid spot rates on the NiFi a couple of weeks later, when you could see what was actually booked and shipped. It then turned out that what was paid fell short by more than $1,000 per 40-foot compared to the quotes. So we might sometimes see developments in the quoted market, but if those quotes don't match the actual physical underlying market, they're not necessarily realized. That's also why it's interesting to keep contrasting what do we see in the quotes, which of course is instant. It's right now we can see the quotes versus
Mhm.
what is paid, which of course is always 2 to 3 weeks late because it does take time from when you accept a quote until that cargo is physically on board.
Yeah, definitely agree there.
And on the paid one, I mean, the SCFI that is usually the quoted index out there, of course, only covers export trade from Shanghai, doesn't cover the Atlantic for good reason. But the NIFI does cover the head haul Atlantic. And here's another interesting development the last couple of weeks. Because if we see for all of 2025, ever since the beginning of the year, the Atlantic westbound, so European exports into North America, has actually been holding fairly steady on the spot rates, roughly between 1750 and 1950 per 40-foot in terms of what was actually paid. But the last 2 weeks alone, this has now dropped to almost 1500. That is a significant drop. Band 1750 to 1950, now we're down approaching 1500 in just 2 weeks. That is a very, very significant drop on the Atlantic. It is too early to be very clear on why that is happening. But again, since it's the market that governs it, the most likely explanation is weakness in US imports from Europe. It would not be unreasonable to assume we now have all these so-called reciprocal tariffs back in place, which also means that this will likely begin now to have a negative impact on demand on the Atlantic, which might be what we're beginning to see reflected in the Atlantic spot rates coming into the US as well. If that is the case, we could potentially expect to see these rates drop further in the coming weeks as well.
Would this be impacted by the peak season in Europe kind of coming to a close as well? Or is that more
No,
related to the Asia to Europe trade?
yeah, that's more the Asia-Europe trade because Asia-Europe and Asia-North America is basically governed by partly holiday goods that needs to get there on time and partly by a Chinese Golden Week. You don't have the same kind of dynamic usually on the Atlantic, so that would be quite unlikely. But in terms of the seasonality, there's also another parameter we can look at out there, and that's in terms of capacity. Yesterday, we saw MSC come out and announced the blanking of 6 sailings of their major vessels from Asia to Europe, weeks 39, 40, 41, which is perfectly in line with what we saw them do last year. If I look at the overall market, the newest data are the ones from Sea Intelligence back from Friday. So that was before the MSC announcement of blank sailings. If I look at the first couple of weeks of Golden Week, if the carriers don't do something, you're looking at roughly a 20% increase in capacity year on Asia Europe. I don't think that's because the carriers are being overly ambitious. This is more a reflection that we will certainly expect the carriers over the next couple of weeks to announce a whole raft of blank sailings for Golden Week. And this is not unusual. This always happens leading up to peak season. The carriers don't announce these blank sailings months in advance, but over the next couple of weeks, shippers should definitely keep their ears to the ground for all the service providers they're using, not just on Asia, Europe, but also on Trans-Pacific, because this is where we will certainly see a lot of blank sailings. I think the only open question, and personally I find it very interesting to see how that will play out, is what will Gemini do? The reason I'm singling out Gemini is if we think back to basically early May, when the Pacific trade demand plummeted. That was during when you had 145% tariffs on the Chinese goods. So demand had plummeted. We also saw a lot of blank sailings there as carriers were scrambling to reduce capacity. At that point in time, Gemini did not blank sailings. Gemini did something else. They phased in smaller vessels, which of course is also a way of curbing capacity in the face of weak demand, but it's also a way of then upholding the integrity of your network at the same time. What I'm going to be very curious to see over the next few weeks, how will Gemini handle the seasonal downturn around Golden Week, where we usually see all the carriers temporarily reduce capacity to match this drop in demand? Will Gemini blank, or will Gemini try to a higher degree again to maybe phase in smaller vessels to maintain more of their service integrity instead? That I'm personally very interested in seeing.
Do the other alliances have the same type of fleet where they can switch out these larger vessels for smaller ones? Because it seems like Gemini has the ability to do that. Don't want to say easily, but maybe it's more readily an option for them.
Yeah, I don't think there's anything easy about it either. You can say what happened back in April, May was probably a bit more opportunistic in terms of what can you do almost from day to day as events were unfolding. I wouldn't necessarily expect the other carriers to suddenly start to change the way they're operating. Again, we could see MSC, they're blanking sailing. It's a true and tested method that we always see. So I would expect the other carriers to do that. The added wild card that comes on top, and that goes for everyone out there, is we are only about 5-6 weeks away from the implementation of the USTR fees, the $1 million fees on Chinese ships. So what we should also expect is that the carriers should slowly begin to ramp up and shuffle vessels around. So you would get fewer Chinese-built vessels on the US-based services and phase them into other services, replacing them with non-Chinese built ships. This is going to be interesting to follow and analyze. It's not going to be an easy task to analyze because it will be a matter of looking at every single individual vessel and figuring out where is it going, where is it built, is it being shuffled around. But it will indeed be interesting to follow here over the next couple of months.
Yeah, definitely. Because it's coming up in October, right?
It's coming up in October, and you caught me slightly off guard here, or I caught myself off guard, because I can't remember the actual implementation deadline. I only remember October.
In my mind, I think it's mid-October, but yeah, I also don't have that date handy, but I'm sure we'll be talking about it in the coming weeks here. Are there any updates on capacity looking at Asia to US West Coast, Asia to US East Coast?
Yeah, I mean, again, if you look at year on year, and we're just looking at the couple of weeks that we have right around the Golden Week, we're looking at something like 4% up right now into the US West Coast and around 18% up to the US East Coast, which means that there shouldn't necessarily be much reason for the carriers to blank a lot of sailings into US West Coast. Caveat here is demand going to drop off a cliff with all the tariffs coming back in? So that's basically it. Whereas to the US East Coast, we should most certainly expect quite a raft of more seasonal blank sailings as we used to as well.
Okay. All right, sounds good. Maybe let's switch topics a little bit here and talk more generally about global performance and on-time performance. I know we have the new numbers for July that have been released.
Yeah, I mean, the new July numbers coming out from Sea Intelligence were showing a decline in global reliability. So it went from 67 to around 65%. Before anybody starts seeing yellow and red flags all over saying, oh, my performance is sliding backwards again, I would caution that this is a seasonal measure as well. So if I look at the performance data over the last 14 years, usually from June to July, we see global reliability decline minus 1.6%. So that we're dropping a couple of percentage now is actually completely in line with a seasonal expectation. So yes, the number is down. That is perfectly correct. But I would not say that this is an indication that global reliability is now going downhill. I would rather say that it didn't improve either. It simply followed the level it was supposed to be at. So there are basically no changes. You can then sit back and say 65%. That means that 1 out of 3 ships arrived late. And given the methodology here, late means more than a full calendar day late, which is basic. I mean, imagine if you were flying somewhere and you were told, well, it's only late if the aircraft is more than a day late. I mean, that wouldn't quite work for anybody, would it? But that's nonetheless the reality. We should also keep in mind that prior to all of the disruptions of the last 5 years, the norm was between 70 and 80%. So 65% is still falling slightly shy of that level. When you look at the performance of all the different alliances, though, they have all improved, some of them significantly compared to where we were last year. And yes, this is the deep sea services. It's the direct deep sea services. It is indisputable they are more reliable than what they were last year. Does that mean that all cargo is now on time? Absolutely, it does not. First of all, again, 1 in 3 ships are still late. Then you have the whole discussion. Well, one thing is the mother vessel, but what about the feeder vessels? They are definitely challenged in some places, especially due to port congestion in Europe. We seem to have some port congestion issues in Asia as well. We have port omissions, we have blank sailings. Of course, all of these things conspire on top. So if you look at it from the perspective, is my specific box being delivered on time? You may not necessarily recognize these percentage numbers, which is perfectly correct as well. Doesn't mean the percentage numbers are wrong. They're just measuring one element of the reliability. But what I am pointing out is that one element in itself has actually significantly improved compared to the relatively abysmal levels that we were seeing last year.
Yeah, I think most shippers might anecdotally have different experiences, but it's definitely good to hear factually what are we seeing and how are the trends aligning.
Yes.
I mean, is it just peak season that makes the reliability numbers generally between June and July decrease slightly?
That is a good question. I don't actually have a good answer to it. I can only see mathematically that this is the seasonality that we normally see from June to July. Keep in mind, this is global. So it includes all trades, it includes all ports around the world.
Okay, gotcha. All right. Well, a couple more topics today. So there was a recent Houthi attack, and I think you had some thoughts here that you wanted to talk through. I'm curious to kind of get into that.
The factual one is there was an attack on a tanker vessel in the Red Sea a couple of days ago, but the vessel wasn't hit. The missile or whatever it was smashed down close to the vessel and exploded there. No harm done. But there are several things I think it's interesting to point out. First, the obvious one, it just shows that, well, the Houthis are still there. They are still a credible and genuine threat. This has basically not changed the last 2 years. So that's one thing. The next thing is this happened the day after there was an Israeli strike that killed the Houthi prime minister. I honestly don't think there's necessarily a link between the two. They might coincide in time, but it seems more realistic that the Houthis, and they have done it before, they do follow through on what they say. So they have identified a range of vessels. They say these are vessels we are going to target. One of those they've said is vessels that are, for example, owned by Israeli entities will be targeted. This one was. We have seen that before. The one thing I think might be interesting, and you can say that's more, you can say, a personal opinion of mine. I think there's a discussion this industry maybe is shirking to have. And I will not purport to have the answers, so I will rather put out what the dilemma is, because nothing here is black and white. On one hand, we are operating in a global shipping industry. One of the most important principles for this to work is freedom of navigation on the high seas. And there's a lot of effort that's been spent around the world, has been for decades and decades, to uphold this principle. And that, of course, also means that any ship owner or ship operator is perfectly free to say, my vessel is going to sail through the Red Sea. That is freedom of navigation. That is perfectly legal. No dispute there whatsoever. We also have the practical reality on the ground that there are certain ships that we almost know for sure are going to be shot at. And just think back about a year ago. A year ago, a tanker vessel with an enormous amount of oil on board was hit in the Red Sea. This particular ship owner back then had actually been pre-warned that they would be shot at if they took the ship in there. They did it nonetheless. The ship was indeed hit. And we came within a hair's breadth of having one of the worst oil spills in an environmentally sensitive zone in the history of shipping. It didn't happen. That was more down to sheer luck than anything else. Again, I'm not necessarily saying that this ship owner did anything legally wrong. They absolutely did not. That is the principle, again, of freedom of navigation on the high seas. But now we have it here again. We have a vessel which has clearly been named in the target list. We know there's a high likelihood it's going to be shot at. Where is the principle on the other side? When is it that we should, as an industry, say the risk, not necessarily in terms of material risk, but the risk of killing our seafarers, the risk of polluting our oceans, start to outweigh our legal right to insist on going through a body of water where we've been targeted? This is not a black and white discussion. You have all sorts of gray zones and nuances, and I will not purport to have the answer. But what I do see, at least personally, I find lacking in this industry is any kind of honest and upfront discussion in terms of these clashes of different principles. How should they be addressed? Because right now, it's all down to legality, and anyone is free to send any ship into a risk zone, even if that then jeopardizes the lives of the crew and it jeopardizes the environmental sanctity of whatever waters that we sail through. I think there's a discussion overall in the industry missing here.
It's a very convoluted type thing to work through. You've got all these different parties and different interests that are trying to do what's best for their business, trying to do, exercise their right to freedom of navigation. But I think what you're bringing up is a really interesting topic. And yeah, there's definitely not a right or wrong.
There's not a right and wrong. And I can already also hear the counter argument. I could likely make it myself as well and say, well, we should not be pressured by, let's call them what they are, terrorists. If terrorists are threatening to shoot at us, should we just do what the terrorists say and send every single ship around? That's also not a very good principle, right? But again, there is a physical reality on the ground. Does that gray zone move so much? So we say, well, this is not really worth the risk. Again, I don't purport to have the answer, but I think the whole discussion is missing.
Do you know if any of those vessels have some extra protection as they go through the Red Sea? Or is it just kind of business as usual and crossing your fingers a bit?
Apart from having armed guards on board, I mean, this is business as usual.
Yeah. Well, I'd be curious to hear what our listeners think about this. I don't know the answer for sure, but it is definitely interesting. I think, especially if you're in the container shipping side of things, you're not maybe necessarily thinking about the other like bulk or oil and the situation with those markets, but it definitely impacts us, right? We've been seeing the Red Sea close to most vessels for almost 2 years now, as you said. So I think it is an interesting discussion to have where you're thinking about what's the impact? Should we do something? Who should do something? Who's kind of responsible for, leading that sort of initiative if we do pursue it? So interesting thoughts there. All right. The last topic that we had today was a meeting between the leaders in China, India, and Russia. Can you talk a little bit about why that is important to our listeners or something that they should be aware of?
Yeah, I think this should be seen as just another sign of a changing world order. I mean, I think a lot of the listeners here might have seen or at least heard of the meeting over in China, where there seemed to be a pretty friendly meeting between President Xi of China, President Putin of Russia, and President Modi of India. And this is not in itself a pivotal moment. Let's not make it overblown, but it is a sign of a world that is indeed changing. The world is not becoming multipolar. It already is. This is just one more of these examples. But this might be changing more rapidly than we would have thought, say, 6 months ago. One of the interesting things here is maybe not so surprising to see Xi and Putin. They've been meeting before. I wouldn't say China is necessarily supporting the Russian war, but they're definitely staying out of it and playing hands off. What is much more surprising here is to see what appears to be friendliness between China and India. Keep in mind, China and India have actually been enemies for decades. They have a disputed border up in Himalaya. It's only a couple of years ago that were actual border skirmishes up there. So seeing a sudden rapprochement between the two is actually a sign of a world balance that seems to be changing relatively quickly. Now, I would not ascribe this solely to the US trade war. However, the US trade war clearly does play a role. The relatively chaotic approach to the trade war we have seen over the last 6 months has increasingly led all the different trading blocs around the world to come to the conclusion, in order for them to safeguard their own trades, they need to bolster trade with all other countries around the world. And this is just another symptom of it. This is, again, among some of the larger powers out there, of course, but we're going to see more of this going forward, not less. So let's not overblow the moment of these three leaders, that it's not a pivotal moment. It's not kind of a Yalta conference kind of thing, but it is a clear sign, not that the world is becoming multipolar. It's a clear sign the world is already multipolar, but the trade ties and other ties between countries is accelerating rapidly, and part of that in consequence to the trade chaos unleashed by the US.
Yeah. So it seems like we might start to see more diversification throughout different countries that maybe weren't always major trading partners before.
We will, and this brings a completely different topic also to bear, because we are going to see more trade diversification. We have been so used to, at least from a container shipping perspective, of thinking in terms of Asia, Europe, Asia, North America, because these were the pivotal axes we had for decades. the largest trades. These are still going to be large trades, make no mistake, but this is not where the bulk of growth is going to be. The bulk of growth is going to be in a lot of other bilateral trade corridors. So trade will indeed become a lot more diversified than what we've been used to. And that brings up a completely different question. Is the global fleet of container vessels actually designed to handle this diversification? I'm not sure it is. We have been spending decades upscaling vessel sizes because we were so used to growth happening on these major corridors. When that's no longer the case, we may end up with vessels that some of them are fine, but some of them might be a wee bit too big, let me put it that way, which means we're going to rely more on hub and spoke. And that exposes another weakness in the order book, that we have likely under-ordered when it comes to feeder vessels. Now, of course, this can be corrected. Vessels can be ordered, but we are going to see a structural shift in how trade is done over the next decade, and therefore also how vessels should be deployed and what are the right vessel sizes and deployment patterns.
Yeah, great insights. I think it'll be interesting to see as this evolves. It's definitely not a short-term thing, but over the coming years, how are these small changes adding up? Yeah. All right. Anything else you want to add for today's episode?
Oh, I think that was plenty to throw in the face of our poor listeners here right after Labor Day.
All right. Yeah, I think that was a good episode. We talked about a lot, covered a lot of ground. We will be back next week. As far as I know, there's no holidays, so we should be recording Monday, and you all will get the episode as per usual. Thanks for bearing with us the past couple weeks. And until then, stay tuned. Talk to you soon.
Thank you all.
Thanks for listening to Supply Chain Secrets Podcast, presented by Nice Shacks. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.